I'm going to start off today taking a look at the heat map. This is a heat map of all 500 stocks that are in the S&P 500, and you can tell that green would be positive, price rising, and red, or various shades of red, would be a decreasing price. Now today you can see that most of the stocks are in the red, which ultimately the S&P 500 went down. There were a few really bright spots. Meta, they went up substantially today. You can see they went up over 11% today. Microsoft went up over 4%, and those are some pretty good moves, but those moves don't outweigh companies like Nvidia or Broadcom or Google, Berkshire Hathaway, and Apple going down. So those weighted stocks ultimately ended up bringing the whole market down. But as the market was going down, it really wasn't moving very quickly, so we didn't have a lot of sell triggers get activated today. We did have some, and we also had some buy triggers get activated today. But I chose not to make any trades off of those alerts. All of the trades I made today are strictly from my day trading activities. However, I did continue to record all of my activities for the day in reference to those alerts. So I go over why I chose not to buy or why I chose not to sell. Before I get into the video, if you can please take the time to click that like, share, and subscribe button, that would be amazing. So today we have seen a significant drop in the S&P 500 today. It looks like it might be the second largest drop since May the 5th. The biggest drop here, I believe, was on May 27th, where we dropped down to 576, and then we ended up closing at around 591. So this is probably the second largest drop that we've experienced so far in a while. Let's take a look at a 1 day, 1 minute chart. We'll zoom in here. Well, actually, you can see the lows of today. This was the lows of yesterday, so we had a little bit of support apparently. This is a support zone. So we bounced off of that support zone and we're going back up. But you can see, zooming in, we opened at roughly 639 and we're down to 634. So a $5 drop, which is not a normal drop, but it's not uncommon for that type of drop to occur. So let's go back to our 3-month, 1 day chart. And we do have some stocks that did hit our sell triggers because the price is going down again. It's now time to show you my decision-making process on why I did not make any sell trades from my trade alerts today. So the first one we have is Bank of America. We just purchased 16 shares at $48.54. What we had yesterday, when activated the trigger, we had price drop below our fast moving average, and we have a continuation for today. I buy Bank of America in blocks of 4, so we will put a sell order for 4 shares. 2, 3, 4, and we will just add 4 cents from the 48. We'll just add 4 cents to the 54, so that's 48.58 is what our sell order will be. Go till cancel, confirm and send, and there's the sell order for that first block of 4. Next stock, IWM. IWM is an ETF for the Russell 2000, which is 2,000 small cap stocks. We currently only have 2 shares. We already have a limit order for 1 of them. And this limit, just sold one of my day trading stocks. So this limit order is for one that I bought at $230. And so we will set a sell order for this one at $225.73. And all of my sell orders basically are just 10% of the overall number, rounded to the nearest 10th. So in this particular case, we bought this at $225.73, 10% of 200. Using this digit here, using 10 would be 20. So we'll add 20 cents to the 73. So the sell order will be $225.73. So we find IWM. our sell order. We're going to be selling one of those. At 225.93, adding 20 cents. Because the rule of using the 10% of the first digit of our purchase price. So we have good till cancel. What is going on? Confirm and send. What is happening here? Okay, I see that. We put another digit in there. 225. Well, that didn't take care of it. We're missing something else. All right, let's just go ahead and delete this whole thing. Try it again. 225.93. And that didn't correct it. Oh, there's another digit in there again. All right, let's take that out. What is happening? Okay, there we go. Confirm and send. I don't know why that was so difficult. All right, next one, Johnson & Johnson. All right, so Johnson & Johnson has seen a nice rise. I got 4 shares at 167, sold 2 of those, bought 2 more on the same day. We currently have 4 shares. I buy in blocks of 1 or sets of 1. So right now, this price, we had price fall below our fast moving average. Then we have a continuation today. And unfortunately, this is lower than our purchase price. So we do have 2 shares that we did purchase. So at 166.58. So we're going to place a sell order. And it's just going to be for 1. And I purchased it for 166.58. So using the first digit of the purchase price of 1 for the 100, 10% of that is 10 cents, which means we're adding 10 cents to the overall price. So 166.68 is going to be our sell order. And the reason we do that is just in case we're preparing to sell this at a profit. And we're hoping that if price does continue down, that it will spike up at some point and trigger the sell. And that way we'll have additional money to use and put towards a stock that is going up. Now with price going down in the S&P 500 in the markets today, this might be the beginning of a turn down in the markets. And when the markets turn down, tech usually is the first thing that sells. And when tech sells, people buy in. You know, hedge funds and institutional traders will buy into staple companies like Johnson & Johnson. They have products that we as consumers need every day. We don't need Nvidia, we don't need Tesla, but when those start selling, people will typically buy staples. So this may actually end up going up if the market does take a downturn. So there's our sell order for Johnson & Johnson. Our next one is Twilio. TWLO. We are maxed out with 8 shares, so that would be blocks of 2 or sets of 2. Twilio is a communications company. 2 days ago, we had price trigger by falling below the fast moving average. We did not sell yesterday because we had price moving back up, and we can see we opened up here at 132.23. So the top of the red candle is where we open. The bottom of the green candle is where the open is for the day. On a red candle, the bottom is where we close, and opposite on a green candle, the top is where we close. So again, quickly, on a green candle, the bottom of the candle is the price in which we open, and the top is where we close for the day. And the red candle, the bottom is where the top is where we open, and the bottom is where price closes for the day. When you see wicks like this, you can have a wick at the top, you can have a wick on the bottom, and you can have a wick on both sides like this. So the bottom of the wick is the lowest point of the day, and the top of the wick is the highest point of that day. So given that we have price just going up and down right here, let's take a look at our MACD. Since we don't actually have a cross, I'm probably not even going to sell. We do have the opportunity to sell to Twilio for a small profit, but we'll wait and see what happens. The RSI is not on a downturn. It's not on an upturn. It's just at a level position. So we'll pass on Twilio today. And we'll take a look at XLY ETF. For consumer discretionary, we have price going down. That is a clear indication of a change of direction, at least in the short term. Now we bought 4 at $218.40 here. We sold 2 of them for a 24-cent profit. And then we bought 2 more to enter back in. So we have 4, and so we will be selling 2 at a profit of, we'll just call it $4. We'll round it to 4, so times 2, we'll have a profit of $8. So let's see if that sells at that position. Price has already dropped. So let's try it again. We'll come down to 222.33. And there's 2 sold with an $8 profit. All right, next on the list is Yalla. Take a look at Yalla. All right, well, we had price trigger, a sell trigger or a sell alert as it fell below our fast moving average. However, price has turned right back around. So we're going to bypass Yalla and not do anything with that right now. The last one on this direct list is UDOW. So this also is in a confirmed downtrend. Not only did we cross our fast moving average, we crossed our slow moving average, and now we're continuing down. Again, the UDOW is an index that tracks the Dow Jones Industrial Average. I have 6 shares. We buy those in blocks of 2. So we're going to set a sell order because price is already lower than our purchase price. So we'll right click in here, pull up the sells ticket. We're going to mark that at 2. As you can see, we purchased 2 at $99.53. Price again is already lower at 95. So 10% of our first digit of our purchase price is 9. So we're just going to add 9 cents to the 53. So that'll be 99.62 is our sell order. Could tell cancel, confirm, and send. So now we have that. All right, so those were all of the stocks that hit our sell triggers. Now I do have some stocks to sell elsewhere. We do have some stocks that hit earnings, or they will be going to earnings this afternoon, and I believe some tomorrow. So this afternoon's earnings report charts. Why is that on delay? All right, okay, we want to pull this chart up. So we have Amazon going to earnings, MicroStrategy, Monolithic Power Systems, Coinbase, Apple, and Riot. Now, so our strategy when we're going into earnings, I like to sell at least half of the blocks that we own just in case price falls. I'd rather capture a smaller amount of gain than possibly have a larger loss. So in Amazon, we currently have 5 shares. So we're going to sell 2 of those, or we're not going to sell because every single Amazon is purchase price is already higher than the current price. So we're going to set a sell order, come into Amazon. All right, Amazon, and we're going to set a sell order. We're going to set 2 sell orders. The lowest price that we purchased is $237.73. All right, so we have one at $237.73. So we're going to add 10% of our first digit is 2, would be 20 cents. So we're going to add 20 cents to $237.73. So our sales price is $237.93. Good till cancel. So that's 1. And now we're going to put a sell order for another one, and the next one is $237.79, so that would be a 99. $237.99. $237.99. Now our next stock is MicroStrategy. We already have sell orders. We have 3 sell orders already. And MicroStrategy, when we're maxed out, because this is a volatile stock, I like to have 40. So this is considered one block. So I'm going to just cancel all of these orders in case price rises. So again, I like to have 40 shares of MicroStrategy. Same thing with NVIDIA. I like to have 40 shares of NVIDIA because those are extremely volatile and moving. So we'll just cancel that one block of MicroStrategy shares in case price moves up. If it goes down, it goes down. All right, Monolithic Power. I currently have 2 shares, each of those. You'll be able to see current price is $7.15, but I bought these at $900. So what we'll do is we'll just cancel the highest one, just in case price spikes up $200. It's unlikely, but it is possible in rare situations. Coinbase. Now Coinbase, we only have 1 share because price overall had been going down. Let's take a look at Coinbase on our day trade chart. Let's go to Coin. Let's take a look at that. So you'll see we have 9 days of Coinbase going down. Even though they're opening higher than yesterday, it's still in a downward trend. So we've been selling Coinbase. So we'll go back to our afternoon earnings charts, and we're just going to remove the sell order in case it goes our direction, which is up. Apple. So all of my Apple shares, we currently have 4 shares. I buy those in blocks of 1 or sets of 1. And right now, current price is lower. So since I already have 4, we're going to leave these 2 sell orders because 2 would be half of our 4. And this sell order is at 211.53. If we capture that, great. And if price keeps moving, we'll at least have 2 shares still collecting those profits. Riot. I buy Riot in blocks of 16. So since we only have 1 block of stocks, we're going to cancel that order just in case price goes our direction. So that's our stocks for this afternoon's earnings. So let's go back. I don't know if I've set up for the morning yet. So the morning stocks, no, I have not set up tomorrow morning stocks. So we'll go to the day Tradestor chart. But we can go ahead. I'll set up tomorrow morning's chart and see if we have anything to sell. So tomorrow morning, we are looking at, we have 1, 2, 3 stocks going to earnings tomorrow. One is CVX, Chevron. Another one is Colgate, which is CL. And another one is Chad DeWitt, CHD, which is basically Arm & Hammer. So now, so 3 stocks going to earnings tomorrow morning is Chevron, Colgate, and Church and Dwight. I think I might have mispronounced, maybe said Chad or Chris, but it's Church and Dwight. All right, so we want all the charts to have the same display. So we'll pin this to stay stationary, come into our gear. We want to add a button, and we want to add a style because we want these 2 charts to have the same moving averages on display as this chart. Oh, where did that go? Okay, interesting. So we'll go back and add a button. We want style, 1 day, 2 minute. And then we'll hit that, and there we go. All right, so now the charts are showing the same thing on each chart. So we're going to save this, and we want to save workspace. Save that. All right. So Chevron, we currently have 4. We're maxed out at 4, and you can see that we have 3 at 168. No, they were all purchased at 168.94. So we'll cancel 3 of these orders, and with CVX, come back in our daily trading. We're going to sell 1. And we are going to set our price at, we bought at 168.94, so, or we bought at 168.94, so this sell order is going to be 168.94. Go to cancel. All right, so Colgate. So for Colgate, we only have 2 shares, so we're just going to cancel out that sell order. And Church Dwight, we currently own 4, and we're maxed out at 8, so we're going to sell half of these, which is just 2. So we will cancel out the one that we paid more money for, and that is our sell orders for tomorrow morning's earnings of the stocks that we own. And now we reach the time where I typically would be buying stocks, but I take the time to show you my decision-making process on why I did not act on the buy alerts. All right, now we'll see if we have anything to buy. I had 4 stocks hit their triggers, but I had to leave at 3. It's now 6 o'clock, so the market's been going down since. So we'll check these out and see if we're able to do anything. So the first one is DraftKings, KNG. So we had a trigger yesterday, price went up, and then it came down. So we're not going to purchase DraftKings. I mean, it was great price action yesterday. Too bad it didn't continue. Usually when we get 2 green candles, if you'll notice, in a row, you know, overall that is the beginning of a trend. We'll find out tomorrow. All right, next one is MasterCard. We had price go down yesterday, came back up today, but overall it's in a downward trend, possibly because the market might be doing a turnaround. So we will not be purchasing MasterCard. The next one is SoFi, which we just sold out of preparing for earnings statement. So SoFi, we had price drop yesterday, dropped 1 to 3 days ago, then price triggered 2 days ago with price action back up. But yesterday it started down, and we did not buy at any point yesterday. And we had an opening today that is significantly higher than yesterday's close, almost 60 cent, or almost 70 cent actually, and that's pretty significant for SoFi. Then we have the MACD in an overall downward trend, although we have the RSI in an upward trend, although we're at the top of the range. These 2 bars here, this is the lower range, this is the upper range, and anytime price or the RSI reaches this upper bar, you can see it turns red because this is considered overbought. So when we reach the overbought point, many traders feel that that's ripe for a turnaround. As you can see, however, it can go up for a very long time, even though it's considered overbought. But we may be in a turnaround situation given everything else happening with the market. So we'll leave that alone as well, and we'll look at XLE, which is an energy ETF. So we had price, the fast moving average crossed the slow moving average, which created a trigger, although price has been going down for the following 2 days. So we will not be making any purchases today. Now, from the time that I left at 3:15, the S&P 500 went down even further. It is now 6 o'clock. So the market can move rapidly. Market is volatile. Let's pull up the 1-day, 1-minute chart, expand this, and at At 3, quarter after 3, I left around here, and it just continued to fall from 634 to a low of 630. We'll call that 631. So it fell another $3. And if this is the beginning of a turnaround, we've got some stocks that have some significant gains. So maybe tomorrow or next week, if it truly is a turnaround for the short term, we'll be able to sell some of these at a profit. So we want to set up, we want to move back into our day trader chart. And that is it for today. We'll create my watch lists. And on our watch lists, all I did was set sell orders for Bank of America, the IWM ETF, Johnson & Johnson, J&J, and the ETF for the Dow Jones, which is UDOW, and we made 0 purchases today within this particular strategy. Again, this account I day trade in as well, so the earnings and the realized gains that you see will be from that day trading activity. Right, as you can see from my day trading activities, I have a realized gain of $150, and our rate of return on our portfolio year to date is 15.57, where the S&P 500 is 8.98%. Now you can see when the market is going up, because I have a greater concentration of stocks, I only have about 200 stocks as opposed to the S&P 500. When it's going up, we rise at a faster rate. But also when it's turning down, we fall at a little bit faster rate. And we don't like to see our portfolio fall, but when you're investing and you are patient, then you know that it doesn't matter how often it falls, because today, historically speaking, it goes up far more than the market drops. So that is what we're in for. We're in for the market rising. And it doesn't matter how short term this dip might be, whether it's just today only or the next several days or weeks, it'll eventually turn around and we'll recapture at a higher rate of speed the volume of increase compared to the S&P 500. We will outperform. All right, so let's go ahead. The last thing I'll do is I'll show you the activity, well, the action of the stock that had their earnings reports this afternoon. So we'll expand these and zoom in so you can see the volatility of price action. If you're not used to it, this is something that you're going to have to get comfortable with. If you've got a 401k, then you know that volatility, you might know that volatility is a part of your investing within your 401k, but most people with a 401k, they don't pay any attention to it. They just know over time they're looking forward to retiring. As an active trader, you don't want to look at your portfolio every day if you don't have the mental fortitude, the emotional stability to just weather the downturns and weather the drops. Amazon wasn't so bad. It's only gone, well, actually it's gone from 234 down to 217, so that's a $17 move. Typically, Amazon does not move $17 in a day. Here we have a day opening at 236. And it went down to 234. A $2 move or $1 move is typical for Amazon on any given day. MicroStrategies, that's a very volatile stock. I'm not going to go in and try to see what their earnings reports. I'm just showing you the volatility, which is a continuation from several days ago. I'm trying to explain to you how earnings work and how volatile the markets are. As you can see, if we expand this back out and zoom in, well, expand that back out and we zoom in here. You see here's the price action through the day. Apparently a bad earnings, and we went from 379 all the way down to 345. So we'll call that a $34 drop. If we expand this, zoom out to the whole thing, here's just the price action for the day, and here it is just for earnings. So that is indicative of almost how every stock will move. We have compared to how it moves in earnings, our normal move seems rather small. Now, for the next several days after earnings statement, the market activity for each individual stock, that's even unpredictable. You can have a great earnings report and it might go up today, but for the next several days, it might go down. So we don't trade on earnings. Like I said several days ago, I trade only on price action. I have rules set in place and the rules are there to prevent me from trading emotionally or getting caught up in the hype or getting caught up with the fear of missing out, the FOMO. And FOMO is where you lose your money. FOMO is risky. And we are done for the day. Thank you for your patience and time, and have an amazing rest of your day.